Meta just handed AMD a $60 billion chip deal. OpenAI just took a 10% stake, and the stock is still down 25% from its highs. While everyone worships NVIDIA, AMD is quietly becoming the most underpriced AI stock in the entire market, and Wall Street is starting to notice. Let's start with the deal that changed everything. Meta signed a multi-year agreement for 6 gigawatts of AMD's Instinct MI450 GPUs valued at roughly $60 billion over 5 years. Custom silicon built specifically for Meta's Llama AI models. That's not a trial order, that's Meta going all in on a second GPU vendor. And here's the detail that should worry NVIDIA. AMD is building custom chips tailored to Meta's workloads. Analysts say NVIDIA isn't offering that level of customization. When the biggest AI spender on the planet chooses your architecture for inference, that's a competitive inflection point. Then there's OpenAI. They committed to deploying 6 gigawatts of AMD chips starting second half of 2026 and took warrants to acquire 10% of AMD, 160 million shares. OpenAI literally bet that AMD's stock goes up. When the company behind ChatGPT takes a stake in your chipmaker, the signal is deafening. Q4 revenue came in at $10.3 billion, up 34% year over year, and beating estimates. AI-related revenue is projected to hit $14 to $15 billion in 2026. Data center revenue grew 39%, and CEO Lisa Su said growth will accelerate to over 60% annually for the next 3 to 5 years. Earnings per share estimates just got raised $4 for 2025 and nearly $8 for 2026. That puts the forward PE at roughly 30 times. For context, NVIDIA trades at 23 times on 65% growth. AMD at 30 times on 34% growth. Isn't cheap, but with the Meta and OpenAI deals providing multi-year visibility, the growth is far more secured than it was 6 months ago. The PEG ratio is below 1. For a growth stock, that's textbook undervaluation territory. Now the risks. Because the stock dropped 17% after earnings for a reason. NVIDIA still controls roughly 80 to 90% of the data center GPU market. Its CUDA software ecosystem is deeply entrenched. Developers know CUDA. Switching costs are real. China export controls cost AMD $1.5 billion in revenue in 2025. That's not going away. And every major hyperscaler, Google, Amazon, Microsoft, is also building custom AI chips in-house. That shrinks AMD's addressable market even as it grows. The Meta warrant, 160 million shares, is potential dilution of about 10%, and AMD has historically dropped 65 to 83%. This is not a safe harbor stock. So what's the chaos capital take? AMD is the second most important company in the most important technology cycle of the decade. It's not going to kill NVIDIA, but it doesn't have to. It just needs to capture 10 to 15% more of the data center GPU market, and the revenue explosion is transformational. The Meta deal alone provides 5 years of revenue visibility. OpenAI's stake is a vote of confidence from the biggest AI company on earth. MI450 launches in the second half of 2026, and if it performs, analyst targets above 300 start looking conservative at $193 with a peg below 1. This is the kind of setup where patience gets rewarded. NVIDIA gets the spotlight, AMD gets the contracts, and right now the market is only pricing in one of those stories. The capital markets are chaos. Embrace it, and I'll see you in the next video.